Turning real quick on oil, would you be a buyer of oil now as it's been drifting lower?
No.
No.
And I was...
Well, that's an easy debate. Well, I would. Let's talk about it.
Okay, no, and we need to talk about oil because, you're looking at oil stocks and are getting plummeted. And you can say, well, Frank, they're up tremendously where, Devon was $5. And I don't even know. I mean, you have a chart there of Devon or no?
I don't. Not up in front of me, no.
All right, let me bring this up before I start talking about it. So Devon has gone up tremendously, but you have to see how much these things are down, right? So, and they're down a ton. And recently, like the last 2 weeks, I mean, I don't know if you saw the decline in commodities in general, like Freeport has gotten killed, right? You're looking at Alcoa as well, was really, really, just surging higher. Now it's coming down. But, a lot of these names, even coal companies, and coal and surprise, because everybody's using coal like crazy now. I mean, it's there. You've seen demand surge, and it makes sense. But, a lot of these things are coming down probably because energy is coming down, and maybe people will switch more to natural gas now. Price is coming down. But let's see. So we look at Devon here, and it's at $50. It was at 80. It was at 80. And it was at 80.
Not too long ago,
at less than a month ago. So when you see these massive declines, I mean, it was 20%, then it was 30% of these stocks, but you're looking at oil pushing down below 100. And to be fair with you guys, when it hit like 103, 105 on the way up, and I said, you know what, everyone's so bullish on this, it's gone up so fast, I think, it might be a good time to take profits. And stocks went up a lot, like Devon went up a lot higher. A lot of these energy names went up higher, and oil went to 130, and now it's coming down below 100. $100 is huge, right? I mean, even 130. But here's the thing: when we talked about oil, and I'll let you go over this. Look at the forecasts. I mean, as an investor, how do you play this shit? I mean, go ahead. I'll let you go. Go.
Well, I think I don't have it up in front of me, but you're talking about the city came out with a bear case. If we go into a recession, oil could trade down to the mid 60s, 65-ish a barrel.
Yep.
What bank was calling for...
JP Morgan said that global oil prices could reach, stratospheric, and I won't get into the price yet, if U.S. and European penalties prompt Russia to inflict retaliatory crude output cuts, which they could, because they're making money selling their oil to Russia.
Absolutely.
I mean, Russia
selling to China. They're still selling a lot of coal, too.
Selling to China, right? Which is one of the biggest partners. Mm-hmm. And even, to other areas in India.
India and China are big buyers of oil.
So right now, and you're looking at the ruble freaking surging, when it just goes to show you, when you control the energy, you control something that everybody needs, you're in the driver's seat. You're in the driver's seat. As much as we wanted to take away from them, Russia could absolutely destroy Europe if it wants, right? Still 40% of their energy needs. But to get to the price right here, JP Morgan sees $380 oil. Not 200, not 250, 380 in a worst case Russian cut scenario. And then you look at Citi going to 65. So, as an investor, you look at this shit and you go, what? Like, how do you play this? Because if it goes to 360, it's got to be horrible for the economy, I would think.
Right.
If you go back and look, when oil prices usually rise outside of going from 100 to 130, which is, almost unprecedented. I really don't see that. It's record highs. But when you see 60 to 70 to 80, a lot of people associate that where people may stop spending and, because the fuel price is so high. And that never really happens because it's usually associated with a strong economy. That's why. I don't know how to play this. Like, I don't, as an investor, as an individual investor, someone that so-called, expert in news for a long time. I mean, are we going to go to 380, which would destroy the economy? But yet, if we go to 65, it also signals that we're in a massive recession, which is also bad for the economy. So what's the positive scenario here? Like, obviously, you don't want to go to 380, but even if it goes to 150, but to see a discrepancy this much in a commodity like oil is really insane. And I explained this a couple of weeks ago, 2 weeks ago. I got this report showing, just massive leverage on both sides here. And now that you're seeing it push below, now it's $95 a barrel. I mean, at 130, that's significant. You're seeing it at the pump. I know you drove by a gas station and said, holy shit, man, look how much gas prices came down. I said it. A lot of people are saying it. It was $4.98 here.
I'm not there yet.
And
I said it.
I mean, you can get it for $4.40 now. I mean,
yeah, I thought it up this morning.
So it's, it was significant where it was like a $15, $20 difference when I filled up my tank. I mean, it was different. So, I don't know if I'd be buying oil, but why are you bullish on oil here?
Because you had a great call because when you were saying, hey, you could take profits, everybody's bullish on oil, that makes you a little nervous. It's significantly pulled back. So no doubt you were right there. And I also agree. I think those price targets, and they're not necessarily price targets, they're worst case scenarios and all that kind of stuff. I would ignore the drastics, the fringe side. Is it going to it would crush it on both sides if it goes to 65 or 380. Longer term, I think there's been a fundamental shift in oil because of how the oil companies are managing their money and their capital expenditures now. And it's painful right now. I'm down on Devon as I've been scaling into it. However, looking from here forward, I don't see oil, even if oil goes to 65 or 70, I don't see it staying there for a couple of reasons. One, you have no incentives as oil companies to drill more and be energy independent. You have a lot of incentives for them to do variable dividends like Devon's doing, like other oil and gas. VNOM has done that. In total disclosure, I put VNOM in the Dollar Stock Club, and the timing couldn't have been worse. So nobody gives a crap about ExxonMobil in there doing well when what have you done for me lately? So full disclosure.
You have Exxon in there for a while, though. You do well.
Exactly.
So
yeah, exactly. And it's been longer. So, hey, if you held VNOM for a while, who knows what'll happen. But when you look at the global scale, our President Biden's about to go over to the Middle East to ask about increasing production. We've talked about this in the past. Oilprice.com is a great website to look around for this. We can talk about it more in the future. When you don't have a lot of reinvestment to find new oil, the transition to get off of oil is not going to happen near as quickly as what politicians would like you to believe. And from everything that I read, and we'll get into this later today, I don't believe that there's enough spare capacity out there to meet all the demand. And spare capacity just means whatever we're pumping now and the Middle East is pumping now, if they chose to, what could they increase that quickly? And there's rumors out there that they could do a couple to 4 million barrels extra. And all that is just around politics, and I think that's a lot of unknown. So because of those, I'm more bullish on the price of oil over long term, and I would be scaling into this. It doesn't mean go all in, but I don't think that you're going to have a significant drop in oil prices now from current levels that are going to be sustained. And one of my favorite hypocrites that I love to poke fun at, Frank, is still buying oil. Who am I talking about? Buffett. Buffett has been buying Oxy. Mm-hmm. Oxy is the Occidental Petroleum. Oxy, OXY is the ticker symbol. Hand over fist. And I'm just on finviz.com, which is a free website. And if you scroll down to the bottom, they show recent insider trading and such. So June 22nd, 23rd, 29th, 30th, and July 1st, they are buying thousands and thousands, if not millions of shares of Oxy. And they're also buying back their own stock, Berkshire Hathaway, which is always great to see. And I would follow Warren there. I think you can scale into Devon. I think you can buy not any oil company, but the big dogs. I think you can buy here as long as your time frame is longer than a couple of months. I mean, I think you can sock these away for a year. Maybe we can timestamp this if you haven't fired me by then, Frank, and we'll figure it out. But yeah, I think there's too many political headwinds. I think management and oil companies are going to focus on rewarding shareholders and their balance sheets versus just drilling because of political interference. And I think that longer term, oil and gas is a great place to compound money for at least a few years.
Yeah. I disagree a little bit with you when it comes to oil. The amount of oil that we have to really pump and pump through this market, we have an incredible amount of oil. I mean, if you're looking at specifically, if you look at the Permian, which, this is what I've done a lot of research on, and then I was able to go there. And
sorry to interrupt, real quick, I was talking about the Middle East on the spare capacity. Yeah. I know we could, but...
we could, and not only that, you're looking at, what are oil companies supposed to do, right? So if you look at oil companies, we're like, well, why don't you put more CapEx into spending? Well, when you have a president, a year, 18 months before he got elected, saying, if I get elected, no more fossil fuels. We're done. Keystone Pipeline, done. Okay, we're getting off that's it. We're putting these guys, we're going to arrest, he actually said, we're going to arrest these executives, right? So regardless of how strong the rhetoric is, and obviously no one's going to get arrested, as a business owner, if I believe that person's going to get elected president, why am I going to spend so much when it's going to be a complete waste of money? I'm not going to spend my CapEx. I'm not going to be as aggressive because this guy wants to get rid of everything that we do. So that's what's going on right now. Now he's trying to pump it up. Let me tell you something. When it comes to oil companies, it's for shale areas in the Eagle Ford, where large basins, is probably around $50, $45 to $50. That used to be $70. They lowered the cost tremendously through improving technologies. If you look at the Permian, yes, there's some that could produce at 28, 29. It's around, I would say $40. You're going to be profitable almost, most places in the Permian. But with the Permian, there's only, when you look at the Eagle Ford, Dan, there's only 300 foot of pay, right? That's the shale area. So you drill inside of that, then horizontally, you frack, boom, right? Vertical, whatever. And that's where you get the oil from. When you're looking at the Permian, it has so many different layers that you can go deeper and deeper and deeper. So the cost is going to increase as you go 8,000 to 10,000 to 12,000 to 15,000. Now you got these different areas like Wolfcamp A, B, C, D, all the way down. You have the lowest Sprayberry. I mean, this is, upper Sprayberry is like in the Midland part, but then you have the Delaware part. But the thing is, a lot of this area has been drilled, so they know exactly where the oil is. So it's almost 100% success rate when they frack because they see the oil, they know what it is because there's been drilling there for, many decades, almost a century. So the higher the oil price, the more deeper we could drill and the more oil we could pull. We just have to get the okay, and we still don't have the okay. And even all the oil executives came out and said that. And listen, the federal lands or whatever we want to argue. The bottom line is this. We do have a ton of oil that we could be producing. You see how powerful. We cut off every single freaking thing for Russia. We cut off the SWIFT payments. We provided these massive sanctions, which we do all the time. When they took over Georgia, we took over Crimea, they knew exactly what was going to happen. Again, we were so predictable, right? But yet, look where Russia is. Still at war, still strong. Ruble's very strong. They're able to sell their oil. We could become much, 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 much more powerful than any time we've ever been in our country if we just produce oil. Okay, forget about this climate initiatives. It's bullshit. If you want to do it, just take 20% of the profits and put it towards that. And maybe one day when my kids get older, maybe we'll have more wind, whatever, right? But again, you have this agenda of people that don't understand the market, but that's what controls us. That's what provides safety. That provides the most powerful place in the world. And we're giving that away to Russia. We're giving that away to China right now. But when it comes to these oil prices, we have tons of oil here. We just have to get someone to whoever, a different regime, different president, whatever, to say, okay, hey, let's go crazy. Let's drill. And we see the effects of this. Now, with that said, where should oil be? I don't know. I know that there's a lot of leverage in the oil industry, and I know there's so many people that are very, 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 very long. I've never seen more hedge funds go out of business than commodity-related hedge funds to oil in my life. It's always one of them blows up and they're done because they're so highly leveraged and it's such a volatile commodity and it's so difficult to predict that right now this $95 barrel is probably because people are just so long and getting wrecked that they're covering right now. So could we go down to 92? Could we go down to 80? Yeah. But do I think it should be over 100? We should probably be around 100, 105, I think, on average. And then let's see what the economy does. But if you're playing oil individually, be careful. Would I go in and start buying these oil stocks? Not yet, because I do see oil going lower. Because as it goes lower, these longs are like, holy shit, I got to get out of my positions. I'm getting wrecked. I was long. I thought it was going to 250. JP Morgan said 380. It was guaranteed 125. Everyone has 125 plus. All the investment firms, they're long and they leverage the hell out of themselves in future markets or whatever. But when it comes to oil, just be careful. If you like Devon, buy it. It pays a nice dividend. It's cheap. If you believe oil is going to be at 100, 105, you should be buying it and holding it long term. Especially now it's down 30% or whatever, the Exxons or the Chevrons. But just know that oil is probably going to go lower because of all the leverage in the marketplace. And we're seeing that in the market, Dan. Not to keep going on here, but when you see like this liquidity crunch, when you see money to leveraging coming out of the system, people are selling their great names, their great holdings to cover their margin calls and all the shit, right? And pay all the taxes and everything else. And that's what you see where even good names are coming down. Oil is a lot of good names that are dirt cheap. They should be trading a lot higher. I still think that they go lower from here a little bit because, man, there's just so many people that are long and it needs to adjust here. That's how I feel. But again, I could be wrong on it. You were dead right. And just to be fair, I was really, really wrong. I didn't participate in the oil move on the way up. I had a lot of people on here that I interviewed that said, you got to go into oil, which, and we had a lot of in the Dollar Stock Club and things like that. Some of those picks and ETFs. But just missing it on the way up, but kind of like, 95, 100, 105, I still think it could go a little lower here and just be careful if you own oil. Yeah. Especially if you're looking at trading.
Absolutely. Well, let's hope you're not completely right because I'm scaling in. So we'll revisit this.
I mean, but you hold stocks for a while.
Oh, yeah.
And again, you're getting a 30% discount compared to where they were. And they should have been, at 130, it's a game changer. But getting back to Shell very, very quickly here, because I don't want to run too late. But at $70, oil companies will produce as much as they could possibly produce. Not deep water. Maybe a little bit higher than that. You see break even at 70. Most of break even is 85. They make a lot of money. They make a fortune right now where it is now. They're making a fortune where it is right now. But when you go below 70, that's when you'll see them cut back. on, CapEx, the places that they're allowed to drill on, that, the president allows them to drill on. But right now, they're going to be printing money hand over fist. They're going to be buying back stock. They're going to be raising their dividends. These guys are leaner than they've ever been because a lot of them almost went bankrupt with that. What was it, 2014 to whenever, 19, 20, through COVID. It was so freaking bad, that industry, that a lot of these companies, restructured their debt, have much stronger balance sheets, and again, are leaner than ever. So, again, I don't want to go back and forth here. I just think if you're going to buy oil, make sure that you have a long-term outlook. If you're looking to trade, there's people that have been doing this for 30 years that get it wrong, that go out of business. And it's easy to go out of business when you use someone else's money. But, and leverage the hell because you're right, you're going to make a fortune. If you're wrong, big deal. You'll be able to start another fund probably in like 6 months from now and raise billions of dollars, right? So that's the way the system works. But it's just interesting. And I will say this, if you don't know how to gauge it, you could steal $5 million from a bank or get $5 million however you can and just invest it in Bridgewater, right? Ray Dalio, which his flagship fund, is up 30% this year, which isn't surprising. He's allowed to front run the market, right? So
nice.
You front run the market all. It's not like Ray Dalio comes out, and I love Ray Dalio. I'm a big fan of his. But it's not like they come out with this recession, you got to be careful. No, it's just, hey, this is easy. We're seeing what happens before it happens, and we're getting in and we're getting out. We're shorting and we're doing all this stuff, and we know which funds are blowing up. And again, you have all the top mathematicians at this place because they make $120,000 out of college, and they're like, all right, we'll pay you $3 million if you come here. So you have all the top mathematicians, brilliant people there, and they found a way to do it where, hey, we don't even really have to talk about the market. We're just going to provide great returns for you, and that's why it's the biggest fund in the world. So if you can steal $5 billion, that's an entry fee to get in. It might be even more than that now.
I was going to say, that seems a little cheap for that.
Yeah, it might be cheap, but see what happens. So if you don't know how to gauge the market, just go with those guys. And
I'm used to the outside looking in. I'm comfortable here.
I hear you. So, again, what stocks are you buying really quick when it comes to oil?
I like Devon. I wouldn't mind following Buffett into Occidental, and I would play Buffett. I would buy Berkshire through a conglomerate of things, but I like the railroad that they own, amongst other things, to play oil as well.
No, makes sense.
I don't think Exxon. I don't think all the big ones. I think are they have their hands in everything. So Exxon or Chevron. I don't know that you're going to outperform other things depending on what you're going to compare it to, but I just don't think that you're going to be upset if you can hold it for the longer term. Yeah,
and I think you're going to see separation in that industry too when it comes to oil. Well, all the stocks went up tremendously.
There's we don't need to get into it now, but there's also some neat trusts that have I'm doing some research on there's some Permian trusts out there that are basically just holding companies. You got to watch out what accounts you hold those in. Those aren't best for retirement accounts because they're, tax friendly and all that. But this is the time, in my opinion, where you want to start looking at that when prices are down and when, prices could go lower. I just think there's enough political headwinds there to keep them back up.